It's Good evening, everyone. My name is Joy Chen. I'm with the Eaton Fire Survivors Network. We have a really exciting program tonight regarding the SBA. Many of us were told, and in fact, we pushed out a deadline of March 31st of having to apply for the SBA loans, but we were surprised and delighted to find out that, in fact, it is not too late and we can get access to up to $1.5 million and at 2.5% interest, which is money that we cannot get any other place. So this is a really exciting opportunity, I think, for all of us to just understand what's available to us out of that 1.5 million and how we can get that. I think our goal here is to ensure that all of us get access to all the federal funds that we are entitled to. So tonight, I am so glad to welcome Corey Williams of the SBA. And the format will be that Corey will present for 10 minutes or so, 10, 15 minutes, give us an overview of the different pots of money that are available, how they can be stacked together, and who's eligible. Following that, we have two awesome EFSM members, Cherry Lee and Felix Landerer, who will come on and moderate a discussion with Corey. So with that, welcome Corey Williams.
Well, thank you so much, Joanne. It's a pleasure to be able to be here this evening. I probably have seen many of you all in different presentations. So I just wanted to go ahead and do a short presentation because I know the more of the questions of the day is kind of the importance of this webinar. So again, my name is Corey Williams, Public Information Officer with the U.S. Small Business Administration's Office of Disaster Recovery and Resilience. And of course, with the SBA, everybody always wonders, what role do we play? We not only help out businesses of all sizes, but homeowners, renters, and nonprofits. So with the SBA's offer of low interest loans to businesses of all sizes, nonprofits, homeowners, and renters that are not covered by insurance or any other recovery funds. So again, the deadline to apply was actually passed March 31st, as Joy alluded to. However, many people can apply late because one of the things that I've discovered in coming to a number of these webinars and in-person events, in fact, there was one story I had. I was in the city of Malibu, and they had someone impacted by the Woolsey fire, 7 years later, and that had still emotional and mental trauma. So yes, you can apply for the SBA loan as a homeowner or a business owner for physical damage, but you cannot apply online. You're going to have to visit one of the state survivor locations or one of our disaster loan outreach centers to apply in person. And whenever you apply, you can't just say, well, I just didn't want to apply at the time. Or you can't just say, well, I was just waiting for insurance. You have to state an extreme reason as to why we should be able to accept a late application. So that reason could be taking care of a family member or yourself when you were impacted by a medical condition. Or it could be, again, severe emotional trauma or mental trauma that was surrounding the fires, which many of you all are having. And I know that that's a major reason for us to allow a late application. But just don't say, well, I just didn't want to apply for SBA at the time. That's not going to be sufficient. But the good thing is, by going to the state survivor location, you can actually have our customer service representatives give you adequate, like a narrative, what we call, to allow us to accept a late application. Now, for those businesses and nonprofits that are actually just looking for economic injury, which is working capital due to canceled contracts, canceled events, that deadline is still active. It's October 8th, 2025. So yeah, plenty of time still to apply for the economic injury. But again, many businesses and nonprofits have already experienced economic injury. Economic injury actually started when the fire started. You see the fire, you see the Santa Monica Pier with fire in the background. That creates fear for businesses and, for people that's trying to visit LA, and a lot of people, tourism traffic, different things may have been impacted. So your bottom line was probably impacted. And then, of course, if you had storefront businesses or home based businesses in Altadena or the Palisades, you may have been impacted as well. So, again, even though the deadline is October 8th, it's so very important to go ahead and apply now. Now, again, just to recap on interest rates for homeowners and renters is as low as 2.563, businesses at 4, and nonprofits at 3.625. Again, no payment for a year, no interest accrual for a year. And keep in mind that you're under no obligation to borrow if you're approved. And if you decide to pay the loan off early, there is no prepayment penalty. So again, who is eligible to apply for an SBA disaster loan? Again, it's homeowners, which is the largest amount of our funding at over 3.2 billion in approvals as of today. But we also help out businesses of all sizes, private nonprofits, and renters. Now, the declared disaster area, again, the primary county is Los Angeles County, but you have what's considered contiguous or adjoining counties, which are Kern, Orange, San Bernardino, and Ventura counties. So, again, we encourage all who were impacted by the fires to apply. So, for renters, you can use the funds to repair, replace disaster damaged personal property, repair, replace any automobiles that were damaged, covering any insurance deductible. Homeowners, again, repair, replace disaster damaged real estate, repair, replace personal property, automobiles, insurance deductibles, debris removal, and even relocation and refinance on a case by case basis. So, again, primary county is Los Angeles, and economic injury for businesses and nonprofits only is Kern, Orange, San Bernardino, and Ventura. Now, for our business loans, it's used to repair, replace disaster damaged real estate, inventory, machinery, equipment, debris removal, which is important for our businesses, and most importantly, for any of our businesses and nonprofits that may have had economic injury due to canceled events for nonprofits or canceled contracts for our businesses. Working capital can cover operating expenses such as payroll, monthly lease obligations, mortgage obligations, rents, accounts payable, and especially for landlords. If you have any properties that you had in Altadena or the Pacific Palisades that were rental properties, keep in mind that when those properties are inaccessible, that's lost rent. So that is economic injury right there. Now, many of you have been a part of our mitigation information sessions. And one of the things that I want to make sure and give you announcements is that we have our last in-person mitigation information session tomorrow at 10 a.m. to 11 at the Altadena Library. And that's going to be very good because we're going to have kind of a recap of everything that was kind of summarized through all the different sessions, questions that were asked. But the one major question, this is a major pocket of money that as a homeowner, we want you to be able to access. 20% of your total loss up to $500,000 can be used for mitigation measures for all perils. That's wind and tornado, that's flood, that's wildfire, that's earthquake. So a couple of examples of wildfire: installing Class A fire-rated roof, or even removing rough roofing gutter debris that can be ignited through through airborne embers, or maybe going with a steel roof. I was just at an event yesterday at the Pacific Design Center, and they had a metal roof, steel roof, and that is a non-combustible material that can be used in the rebuilding efforts. But again, if we're going to rebuild stronger and use this 20% of our total verified loss up to the 500,000, let's go and mitigate for wind. Let's mitigate for flood, earthquake, and wildfire. And what we saw with the Eden fire was a combination of wind and wildfire. So we definitely want to make sure we're taking advantage of all the mitigative measures with this 20%. Now, one of the things is that once you have your mitigation plan in place, you need to present it to your case manager and get that approval. But you can go ahead and request it in the portal or send an email directly to your case manager to request that mitigation be considered for your file. But again, this is on top of the 500,000 for real estate repair replacement. You can get up to an additional 500,000, but it's 20% of your total loss. We're down to the 2-minute warning, so I want to go ahead and get a few more things real quickly. So again, deadline has passed for the physical deadline, but again, economic injury October 8th, and you can apply in person for a late application, but you have to state a reason, and it can't be I just didn't want to apply at the time. It can't be I didn't know SBA was here. It has to be severe emotional mental trauma, taking care of a family or medical family member, medical emergency of yourself, or whatever may be the case. Always make sure to do that, and you'll have to do that in person. Again, loan limits for businesses and nonprofits is at $2 million. And again, for homeowners, 500,000 for repair, replacement of real estate, 100,000 for personal property, and then mitigation, you can be approved for up to $500,000. And then there's also up to 500,000 for refinance and up to 500,000 for the actual relocation. So those are the different pockets of money through SBA that you can access. Up to 500,000 for relocation, up to 500,000 for refinance, up to 500,000 for mitigation, and up to 500,000 for repair replacement of disaster damage real estate, and then the 100,000 for personal property. Again, CSRs, our customer service representatives, are at the state survivor locations as well as the disaster loan outreach centers to be able to assist you. And again, my email is corey.williams@sba.gov for this disaster. I'm the primary public information officer. And again, if you have any questions, again, what I encourage you to do is visit the state survivor locations. They are so important, and that's why we're still here. And the only center, the only state survivor location that has FEMA presence is actually the State Survivor Center in Altadena, which is at 730 East Altadena Drive. So I did it in 12 minutes, Joy. Let's get to these fun questions.
Awesome, Corey. Thank you so much for that. We have a lot of questions in the chats already. I've been copying and pasting them out into a document, and we're going to try to get to as many of those as we can. Corey, thank you also for providing your email address. That was very kind. A few people came in later. I noticed that we're at 286 now, and we started when we were like at 150. And what Corey had said at the very beginning, which was most important, is that while the official deadline passed March 31st, you can go in person to apply. I encourage you all, if you came in late, to watch the video replay. You can always go down to the YouTube description and get the transcript, which I think will be very helpful. We have a ton of questions, Corey,
All right.
and we have many people who have been tearing their hair out, getting all sorts of conflicting answers from SBA loan reps and wanting to know what to do about that. I am going to now turn this over to our resident experts in the Discord on SBA loans, and they are Cherry Lee and Felix Lander. Take it away, you two.
Thank you, Joy. Thank you,
you.
Corey.
Thank you.
Wonderful presentation to kick off the Q&A. So I will never claim that I'm a resident expert on SBA loan, but like so many of you, I'm also a survivor of the fire in Altadena. Our family, we lost everything in the fire. So we recognize how important it is to have the support and to have the community. And I really want to thank Joy here for rallying the troops together. I think it makes a tremendous difference in our efforts to rebuild our lives. And now as the initial shock is wearing off from after the fire, I think everyone's realizing how daunting the task is in front of us. So we want to utilize SBA loans. And as Joyce says, tons of questions are just flying by. We did solicit a few questions and compile those beforehand. So I'm going to jump just right in. And Corey, I'm going to ask you, we always talk about what we hear is about loans up to 500K, up to 20%. So a lot of people now, they're at the stage of where they are ready to plan with a build and make a budget, and they need to know more concrete numbers of what they can plan with. And there are terms like verified loss floating around. So people have questions how this is determined. Is this that something on the SBA side, is that determined there? Do they bring in the contractor's bid? How does that work? And if you can just shed a little bit of light on these, it's just 4 letters, 2 words, up to, but they can make all the difference in the planning.
Yes. So the first thing that we're doing in the mitigation sessions, this is what I would tell you is your to do. Contact your case manager tomorrow and request a copy of what's called your loss verification report. That's a loss verification report. That is what SBA has determined your verified loss to be. And it's also based on GIS mapping or different things that we use to actually determine the value of the property the day before the fires hit. Again, that's the day before the fires hit. So the question is, once you actually review that loss verification report, can I dispute my verified loss? And the answer is yes. But you need to show information such as an information from your insurance settlement sheet, or maybe you can have some comparable sales from your realtor. You can maybe even use Zillow, but we need to be able to get verified sources to determine your verified loss. So once we get that, so let's say right now we're at 1 million. And let's say after we get some extra comps or some other information, we can go to 1.5 million. Well, now we've gone from 200,000 now in mitigation dollars, which was 20% of 1 million, to now being able to be eligible for 300,000. So now you can see how much of a difference by actually, disputing your verified loss with SBA can make. That can be the difference between $100,000 and that extra $100,000. Now, again, keep in mind with mitigation, that is not for real estate repair replacement. That is a specific plan for hardening your home. And that's why I would strongly encourage you to come to the session tomorrow. It's not too late at the Altadena Library, and you can actually get some tips from the Institute for Business at Home Safety, or you can go to this website, which is wildfireprepared.org. Again, that's, if somebody wants to put that in the chat, that's wildfireprepared.org. And it's a 16-page document which has recommendations for mitigation.
And some people, just to tag onto that, have written about how they have already obtained the loan, but it's now coming into focus that the rebuild might cost a little more. So they're wondering if they can modify their loan to increase towards the up to 500K. And conversely, I think another question that people have is down the road, if it turns out that they took out too big a loan or signed too big a loan commitment, can they reduce it?
That's good. And yes, and yes. So you can make as many modifications to your loan throughout the process of your rebuilding process. In fact, we're still working with people from Lahaina. And of course, you all know Lahaina hit in 2023. So you can increase your loan amount, as the needs exist, up to the cap of 500,000 for real estate repair replacement. Once we've capped out at that 500,000, that's when it's so important to make sure that we actually have a mitigation plan in place. Because again, that money is not to be used for repair replacement. It is to be used for mitigation, which is to harden your home, whether it's from wind, fire, earthquake, or flood. So make sure that you have a mitigation plan that you can submit through your contractor, and that will be approved, and that will open up mitigation dollars, which is up to 20% of your verified loss, up to a cap of 500,000.
Thank you. That's all super useful.
Great.
Sherry, you want to?
So for the
Steve.
homestanding, oh, sorry, Joy, were you
Oh,
saying
I was
something?
just wondering, may I just quickly intercede? I keep on hearing a 500K cap and a 1.5 million cap. What's the difference between those two?
Great question. So
Let's
each
go to
one of
Kurt.
the pockets of money, Joy, you have 500,000 for real estate repair replacement. You have 500,000 cap up for refinance, and then you have 500,000 cap for mitigation. So essentially, an Altadena homeowner, let's say that had a mortgage of, let's say, 490,000, they lost their entire home. So they can apply for the refinance of up to the 500,000, which is the 490. They can get the up to the 500,000 for the real estate repair replacement. And then if they have a mitigation plan in place, depending on what their actual verified loss is, they can qualify for 20% of that verified loss up to the 500,000, and then they're also eligible for up to 100,000 for their personal property, which would include any vehicles destroyed. So essentially, that's how you can actually get the full array of capital from SBA is
That's
through the
incredible.
repair, rebuild, refinance, and the mitigation and the personal property.
See, because I don't think people, I've never heard anyone talk about refinancing a mortgage. So that's amazing. So
Yes,
anyone with more than a mortgage rate of over 2.563%
correct.
can refinance down to that
That's correct.
of 500K of that.
Up to 500K cap.
Okay, thank you very much.
Yeah, we have a ton of questions on the refinance and relocation. Those are maybe sort of somewhat two related things. Cherry, hold on. I just have one more question that I want to intersect here. It's just on the mitigation plan, Corey, that you stressed.
Yes.
Is there a template? Because I think many contractors, right? If we tell them, hey, make me a mitigation plan,
Yeah.
they're like, what are you talking about? How do you do that? What does that look like? Is there a template? Right? What kind of documentation does the SBA need to move ahead? This is a question that many people have, not just on mitigation, but on all things. What kind of documentation needs to be provided?
Great question on that one, Felix. Again, mitigation information session tomorrow is at 10 a.m. at Altadena Library. If you cannot attend, wildfireprepared.org. Again, please put that in the chat. Wildfireprepared.org. They have a 16-page document that has recommendations that you can actually give to the case manager. And give to your contractor, say, hey, this is what I want my wildfire prepared home to look like. But keep in mind that you can mitigate for earthquake as well. We are in California. This is the time now to harden our home, not only from wildfire, but to also harden our home from earthquake. I had some parts on the slide, and Joy, you can make sure to send that slide out to all the EFSN members, that PowerPoint. It has a few recommendations on there, but it has some different things. But again, you can mitigate for all perils. So when you're working with your builder, if your builder is saying, oh, I don't know about this material and that material, if they don't know about non-combustible materials versus combustible materials, I probably wouldn't use that contractor. That would give me a lot of pause, to be honest. So I mean, if we're dealing with licensed contractors and they say, well, I don't know about mitigation, I don't have a good plan, that's probably not the contractor I would probably use. I want to make sure I want my contractor or my builder, whether it's he or she that's going to do this project, I want them to be aware. And we've even had some of our actual contractors attend these mitigation information sessions so they can learn and make sure to incorporate that in their proposals for the homeowner. So again, I would say it's no excuse for any contractor not having a sufficient mitigation plan for you and knowing what materials are combustible versus non-combustible. That's kind of the biggest thing I would say is, that you want to make sure is have a good reputable contractor that understands mitigation and the type of materials that are used in hardening a home.
Great. That's all super helpful information. Sherry, you have followed the chat a little bit and we have other questions. I'll turn it over to you for a little bit.
Okay, thank you. So Corey, regarding tomorrow's session, do people have to sign up? Can walk-ins can we just walk in? Because being tomorrow is the last day.
Tomorrow's the last day. You can go in through Eventbrite and go ahead and put in a registration, but walk-ins are welcome. So I want to fill that room tomorrow to where it's standing room only. So I mean, we have 309 participants. If you haven't gone to one of these mitigation information sessions, please, please, please take that time to go ahead and visit between 10 and 11. I'm going to be there. We're going to have specialists from the Institute for Business and Home Safety. It will be a great session, but we also have a webinar that's going to be Saturday at 10 a.m. You can register for that too. So if you can't go in person, you can do the webinar on Saturday, but you can go to sba.gov and you can go to the mitigation information sessions. But what I'm going to do is try to get this link right now so you can actually see about registering, right? I'm going to drop it in the chat as we speak. So right here. So it's in the chat now. So you can go right in and see the actual mitigation sessions. And if you want to go and register in person, but again, we're not going to turn anybody away. You know, we're here to help you as a fire survivor to be able to get your home not only hardened, get back on your feet, but doing whatever we can to help you in speeding up that recovery and helping you put together an adequate mitigation plan.
Corey, there's a bunch of repeated questions about the loan
Okay.
rate. That 2.53 is the same across everything, right? The refinancing, the repairs, the mitigation, it's all the same rate, correct?
It is the same exact rate. So whatever you were offered, whenever you got your initial approval, that loan is going to carry you for the refinance. It's going to carry you for the mitigation. And I think there was even one question somebody asked, can you do a partial refinance? Yes, you can do a partial refinance up to the 500,000 if that will help you with your finances. And you can also refinance HELOCs. So you can refinance any established mortgage. And one of the things is that SBA has no problem with subordinating their mortgage with our mortgage. So essentially what that means is that we don't mind being a second lien holder. So if you have a primary lien holder, we're not going to be like, okay, if we're lending more money than the primary through the right refinance, we still can be that second lien holder. So that's not a problem either.
Or there are people reporting that their loan officer is not responsive to if they're asking about the refinance. Sometimes they're even saying it's not an option or they don't know. What can people do at that point? Because they feel stuck, they hear about this option, and it's probably very attractive and will, help a lot of people to get back on their feet. So what do they do if they encounter a situation like that?
So if they encounter a situation like that, go ahead and send me an email. I'm going to forward that over to the head of the Processing Disbursement Center, and we may have to have re-instruction with some of the case managers because they're not aware of the full array of programs that SBA offers. Refinance. So here's the criteria that must be met. Let me go ahead and recap that. You have to have what's considered 40% of what's considered uncompensated loss. You have to have it as your primary residence, and you have to intend to repair the damage. Again, 3-step criteria: 40% or more uncompensated loss, primary residence, and intend to repair the damage. If you need to send an email to your case manager, what I would do is I would actually send emails directly to the case manager. Stay out of the portal as much as possible, or do both. But definitely follow up with emails and say, hey, case manager, I believe I should be eligible for refinance because I have 40% or more uncompensated loss. It is my primary residence, and I intend to repair the damage. And a lot of people say, well, what's uncompensated loss? Aaron, you say, well,
That was
Zalewski.
going to be the next question. Yes.
So $1 million of damage, and I only got $600,000 of insurance. 400,000, that is 40% uncompensated loss. You take your verified loss minus what you receive from insurance, and if that is at least 40%, then you qualify, and that is one of the criteria you have for meeting the refinance criteria. So again, if you have $1 million home and you have only $600,000 of insurance recovery for real estate, and that's not your personal property, real estate, like for like, then you are eligible if this is your primary residence and you intend to repair the property.
So Corey, that 600K is determined by your insurance policy because there are a lot of people who are getting the runaround for their insurance, delays and denials, et cetera, et cetera. So is that 600K like what you actually got in hand or what's on the policy?
So it's actually what you have in hand, but it will also be, we need to see a final settlement, Joy. So many times what's happening is that, let's say California Fair Plan, they may settle for 600,000, but I know they're doing it in certain increments, and especially with the mortgage company, they may hold 33%. So if they hold where they only give the actual homeowner 33% or 200,000 of that money, keep in mind that that the homeowner is actually going to get 600,000. So they are at some point going to get 600,000. So SBA is going to use the final number to determine the uncompensated loss. They won't use the money in hand. So that's where it will require a final settlement of the insurance. So, and that will determine whether that homeowner has the qualification of a 40% uncompensated loss.
Well, that's going to be a problem, I think, for many of us because many of us insurance is dragging, dragging, dragging.
Yeah, it's a
And it
timing
could
issue,
be
right? Yeah.
Yeah.
it could be years before there is a final settlement.
Well,
So
in that
no,
situation, Joe, what I would say, let's go ahead and do this. Go ahead and put in the refinance request. And again, keep in mind that even if it's declined the first time, you can still appeal that. And remember, you can make as many modifications to your loan as you need. So let's go ahead. If you feel like you're close to that number, go ahead and put in the request. That's what I would say. And send an email directly to the case manager. And when you're sending emails to the case manager, this was my first job out of law school. I started March 06 during Katrina, Rita, and Wilma. So one of the things, we didn't have portals, we didn't have all this stuff. What we had was a direct email. And what you want to do is whenever you're sending an email to the case manager, you always want to make sure you put the application number or the loan number and put what you're asking for. So put app 1222222 dash request for mitigation. App 122223 request for refinance. You need to be very clear in what you're asking the case manager. Don't leave it up to guess. Go ahead and make sure that you're being very clear in your request, and always CC yourself, because then if the case manager says, "Oh, I didn't get that email on this date," I'm like, "Oh, well, let me check. Let me check my email. Oh, Joy, Joy, I do see the email. I have it time stamped at 7:24 p.m. on October 6th. I sent that email. Do you see it now?" Boom. Because you CC'd yourself and you've covered yourself. Now you have that protection when you're going to that case manager saying, "Oh, I didn't put, you didn't, I never received it." Okay, well, let me go ahead and send it right back to you. Here we go. So that's what you have to do. You have to really be direct with your case manager. Tell them exactly what you want, and always never assume they know your case number, because those are the emails that are read last. Is because if they have to do extra work, they're not going to just go and go look this immediately. So make it easy for them. Make it clear as water. Like, hey, this is my application number. This is what I'm requesting. This is the timestamp. This is the date.
Felix
Or
and
when it comes,
you guys have a
yeah,
ton more questions. Yeah,
I
let's.
know the questions are just flying by in the
I
chat. It's really
know.
hard to keep up, but I think
Yeah.
we're getting a ton of super useful information. And I just want to acknowledge, Corey, that the SBA officers, it might be hard to reach sometimes, but you guys have been going through staffing cuts, and it's sometimes hard to just appreciate what on your side of things. So I appreciate your words about making it easy for the loan officer to provide all the information. That said, is there I mean, you're providing a lot of information here, but is there another resource, a roadmap, or a guide that explains all these processes and the timelines? And you were telling us to ask for specific things. Sometimes it's sort of a chicken and egg problem. We don't know what to ask
To
for
ask for.
because we've never been through this, right? This is for many of us, most of us probably the first time. I feel like, I mean, I never want to be in this situation again, but the next time I'll be much better prepared. So do you have another resource you can point to?
Yes. State survivor locations. I mean, we have
Yeah.
customer service representatives staffing these locations. They are here for you. We have a state survivor location right in Altadena, 730 East Altadena Drive. We also have a number of disaster loan outreach centers. There's one on Sawtell. There's also one that's in the Pacific Palisades at the
Yeah.
American Legion. We have centers throughout LA County. So, yes, the best resource is talking to somebody in person because they're your intermediary between you and the PDC. I can be an intermediary in some regards just for some things that I know I can bring up, but I can't be an intermediary for everything. So, again, use the state survivor locations. That's why we're still staffing these. There's a reason that FEMA is even still at the Altadena state survivor location. They're no longer at the Sawtell location because they understand the needs of Altadena are still needing to be met. That's why they have FEMA there. So again, if you need to see FEMA and you're from the Palisades, make that drive to Altadena. If while FEMA's there, I can't promise how long FEMA's going to be there, but I can promise you the SBA, we're in this for the long run. And we already got guarantees from the Pacific Palisades American Legion that we can stay as long as we need. So we'll probably be in the American Legion well into 2026. So there's going to be a presence of SBA well into the new year to help you. Now, it may require a drive, but we're going to be there. I don't know how long we're going to be in the Altadena Community Center because we hope that as the community returns to normalcy, they may have the community center open for traditional activities. But as long as the community center is going to have us, we're going to be there. But we're throughout LA County, so we are that conduit.
Fantastic. Yeah.
Okay, a few questions. I just hate to cut you off, but we've got
No, you're good. Let's get them.
some more questions. If we got an SBA loan at a higher interest rate than this interest rate being quoted tonight, can we have it? Are there
Yes.
other rates being given to people that are higher than
Yes.
2.563?
That there are. So
Can we just say, hey, Corey Williams told us?
No. So here's what you have to do, Joy. So if someone has a high credit score, and usually what's considered an 800 credit score, then SBA has what's considered credit available elsewhere. So if you are offered that higher rate, what you can do is that you can go to the state survivor location, have them draft a narrative and say, hey, you know what? I was offered this higher interest rate. I would like to request a dispute, and I believe I should be able to receive the lower interest rate. I have a kid going through college. The cost of rebuilding my home is about 300,000 or 400,000 more than I anticipated. I have medical conditions from the fire. Anything that can overcome our decision, because keep in mind, this is a federally subsidized program. And so it doesn't work where traditional credit makes you get lower interest rate. This is, if you have, what's deemed credit available sources elsewhere because your higher credit score, then you're going to potentially have to appeal that, but you can appeal it. Everything can be appealed, but you have to have a reason to overcome it.
That's amazing. I cannot believe how many good things that we're hearing tonight. I mean, who would have thought that you can actually get a lower interest rate, and the way to do it is by going in person. So thank you for all of this. Felix, Cherry, what else do you have?
Cherry, go ahead.
Yeah, so Corey, I want to go back into your loss verification report. So for people with homes standing, that's my case. So something that we've been dealing with is at the beginning, we were told, oh yeah, this is kind of like the damage you have. Now that we've gone through having a CIH testing and all that, reports came out, we know the smoke damage is more severe than anything that's visible. So then the question becomes, we have to fight with insurance to prove like it is that bad, right? So is that the same kind of fight we have to show SBA, or is a CIH report sufficient to show like, hey, this is like there's lead, asbestos, and like everything that's really severe in the home? Is that change the loss verification report? I guess that's
Yes, and the answer to that question is yes, it can change it, Cherry. So what's going to happen, what you want to do is send a copy of that report over to your case manager. Again, app number, request re-verification of verified loss, and put in that report, hey, this is Cherry Lee. I initially had a verified loss determined by SBA at 50,000. I have a report that states it's going to be 100,000 to actually that's been determined by a verified report. Here is attached. Please, thank you for your consideration. Simple as that, Cherry. Just send any information that to SBA that can overcome that decision, and that should be sufficient.
got it. And like what Joy mentioned earlier, then the process of getting the final, I guess, settlement with insurance on this is long.
Right.
All
Right.
right. So then for how does that work for survivors with homes standing trying to do the refi, do the refi portion of it?
So I'm going to be honest with you. Remember that with the refinance, with most of the smoke damage, it may not meet a very high criteria for the refinance, because remember, it's 40% or more uncompensated loss. So depending on what the insurance is going to be able to give you, you can be eligible. But like I say, that's you didn't have quite as much damage, so you're going to really have to make sure you have the reporting to show that 40% threshold, and also the intent. The other two, intent to repair the home and the primary residence, is easy. But for smoke damage versus a total loss, is going to be a little bit harder. I'm not going to say it's impossible, but it will be a little bit harder for the refinance. But again, put the reports together, make your ask, because you can make any request you want to make, and it's up to the case manager and SBA if they want to approve it. But if you can
It's
show the
amazing.
justification, then that'd be great.
It's amazing. I mean, I want to underline what you're saying here is that these decisions are sometimes discretionary, and that if we're not happy with a decision, we can always keep going back. And going in person might be even more powerful. So that's really great. A few more questions around things that might not be covered under those three buckets. One thing is for renters. It seems like most everything that we're talking about tonight, like around the mortgage, around these repairs, these are for homeowners. What can renters get from SBA?
So renters can get up to $100,000 to repair, replace disaster damaged personal property, including any vehicles. It's an unsecured loan. Again, no collateral required, up to the full 100,000. Interest rates are as low as that 2.563. No payment for a year, no interest accrual for a year, and the loan is amortized up to 30 years.
Wow. Okay, that's awesome.
That is great to hear. Yeah.
Yeah.
Corey, we have about a little more than 15 minutes left. There's still a ton of questions, but people are loving it. I see someone wants to adopt you, so watch out for that. But
That's good top Corey. Okay.
And I'm taking time for my birthday today, so that's how special you all are to me.
It's your
I'm
birthday?
46 today. Yep.
oh
Yep.
my God,
How old?
So
birthday.
46 today.
46.
Yep.
I would have
Just
guessed
so you all
36.
know,
Oh, well, thank you. Thank you.
I happened to bump into Corey playing pickleball. And
Yes.
he is a mean pickleball player. I just completely randomly bumped into him. So if you guys
Can I
come across
yeah,
Corey, watch out.
yeah, congrats. I'm not going to sing happy birthday because I'm terrible at singing, but happy birthday, Corey, and we really appreciate it.
Thank you.
A lot of people are making progress with their loan, and they're making
Yes.
progress with their plans and builds. Permits are coming in. So now is the time where they need to make decisions about when to draw money. There are people, right? There's the 50K that you can draw. Then there's the 1 year, the 12 months sort of hiatus period where the interest doesn't accrue. So can you talk to that a little bit? Timing and documentation and how it relates to insurance money. We understand that has to be spent first. So how does that happen? Just paint a picture for us here. When people actually are ready to dig into the ground and they're shovel ready, but they need now a plan how the funds will roll out.
Great question. So here's what we want to do. If at this point right now you haven't requested disbursement and you're not quite ready to build, what I would do is go into the state survivor location at the East Altadena Drive or any of the disaster loan outreach centers and let them do what's called a manual closing trigger. Many of our borrowers are not seeing this. So what happens is if you don't do the manual closing option, we're automatically doing it through a title company, and then we turn around and disperse that 50,000. Now we are working on, and again, I cannot promise this, but we're working on extending that disbursement period because that has been a major concern for those who receive disbursements inadvertently, and it was like, hey, I didn't want this money; it was just in my account.
Right. Yeah.
So we are working on that. That has been brought to headquarters. I cannot give you a definitive answer on if it's approved or not. But what I will tell you is that it has been brought up to headquarters. But in this instance, if you have not requested a disbursement and you're not ready to build, go ahead and go to the state survivor location. You can sign your documents personally, but they will check that box as a manual closing, and that will allow you to not receive the disbursement. So what's going to happen then, you'll have your loan closing documents ready to go. Now you need to start spending your insurance money that you have in hand. Because keep in mind, you have to account for 100% of the insurance funds in hand. And that's so important, as Joy alluded to. Everybody hasn't gotten all their insurance money. So it's only in hand. So if I have 600,000, that's a pending settlement. I only have 200,000 in hand. Spend that 200,000 or commit that 200,000, and then you can go ahead and start drawing into your SBA funds at that time. But remember, we cannot duplicate benefits. So we have to account for 100% of our insurance funds before we make that exception.
Mhm.
Corey, is insurance money that is held by the lender, by your primary mortgage company as an escrow, secured escrow, is that considered in hand?
It is not, Felix. Nope. Only
That
if
I
it's
think
not a
that
current bank
is
account
something that
and
many people
accruing.
do not realize and
Yes,
That is
is
huge.
yes,
changes the
and your
equation a
bank
lot.
account. Yes.
Yeah. Yeah. Felix, do you want to just give one sentence about what you're talking about here? Because I just want to make sure everyone understands that very important question.
Yeah, I'm talking. This is for homeowners who have a mortgage. And we're discovering that in the case of a total loss, I think it might also apply for smoke damage. Insurance money is sent to you, but the lender is also on the check. So you need to send it to your bank and they hold on to what you still owe them. They might pay out, if you're lucky, the overage. They might pay you an interest. There was just a law passed thanks to a lot of lobbying, and Joy, you played a role in that. So, but that money is locked, and you can disperse it as you build. But it's not in your hand technically. So I wanted to confirm with Corey whether that that term really applies to how that money is sort of earmarked. It's not the money that we have. It's locked up with the lender.
It's only the
Okay, so
money
it's
you have
locked up
in
with
hand.
the lender. So let me ask you, Corey, when
Yes.
I apply for the SBA loan, it's locked up with my lender, so I'm going to ask for it. But then a few months from now or a year from now, that money does come to me. So there's
Then you have to spend
a
it.
double thing going on,
Yeah, so
right?
it's going to be a lot of back and forth. So what'll happen is, let's say if you have to get let's say 33%, let's use an easy example. 600,000 you received a third of it. So you have 200,000 in hand. So you spend that 200,000, then you can request SBA funds. But then what's going to happen is they may do a disbursement of 200,000, they may do 300,000 depending on what contracts you have. So let's say we get 300,000, but then let's say now the insurance company, the mortgage company, because now we've made more progress, they disperse another 200,000. Well, now you
Yeah,
got to go and spend that 200,000 from there. And then let's say we spend that 200,000 again. Now we go back to SBA. Well, I spent 400,000 now. Can
got
I
it.
get 200,000 from SBA? That's how it kind of works. It's kind of tandem, hand in hand. We can't duplicate the benefits, and that's kind of how it works. And one of the questions that was asked was ADUs. We are bringing ADUs up, but as of right now, September 11th, 7:49 p.m. ADUs are not allowable for those who asked that question, but we are bringing that to headquarters. We understand there's a lot of different concerns that people have, but ADUs are not allowable at this point, but it is being brought up.
So from a
Uh,
building point of view, we are allowed to build a little bit bigger. This question comes up a lot,
yeah.
10% or 200 square feet. How does that factor in with the SBA loan? Do you does it matter? Do we need to bill it for the 100% and then the larger piece? Do you care from an SBA point of view?
From an SBA point of view, we want you to get as close to where you were the day before the fires hit. If you had 1,000 square foot home and you want to go to 1,500, that's reasonable. If you had 1,000 square foot home and you want to go to 30,000 square foot, that's probably not reasonable. So it's what we look at is what's going to get you in the position that you were as close as possible the day before the fire hit. And that means the code upgrades, all the things that are necessary. And then if there are any things that you want to do to protect even further beyond, again, wildfireprepared.org, that can prepare us even further, then that's where the mitigation funds can step in. And then if we've capped out our money with repair, replacement, and code upgrades, then we can convert the rest of that money into mitigation if we're capped out at the 500,000.
Corey, I would like to ask you about other categories, if there are other categories that we could potentially get. So for example, many of us are starting to run out of ALE, which is the temporary housing money. It's going to be like minimum 3, 4, 5 years until we can rebuild. Our insurance company will only pay us for, let's say, a few months, or a year, 2 years, 3 years sometimes. But some of them are much less than that because it's capped on a dollar amount. Can we use SBA to pay for our temporary housing? That's one. I'm going to ask you a couple categories. Temporary housing. Another one, I forget what was the other one I was going to ask for. So temporary housing. You had mentioned emotional trauma. Was that talking about just that's our reason that we give when we go in person for why we couldn't do it earlier? Or can we be compensated something for our emotional trauma?
Great question. So the emotional
And the
trauma
last
can be
question is economic injury. You talked about economic injury for businesses, like loss of income or whatever, but many of us lost income personally. So can we get money for lost income, like economic injury? So that's 3 questions in one.
3 questions. I got
One
3
is
answers.
ALE, one is
I got you. I
emotional
got you.
trauma or whatever,
I know. I got them all. I got
health
them all.
issues, for example,
So,
and then the third is economic injury. Yes.
okay, LE, no. No additional living expenses because SBA only covers real estate repair, personal property, vehicles. Keep in mind that that's where you can actually step in and go to the survivor location and see if FEMA, if you've capped out your ALE. Keep in mind, FEMA has a program that can cover for an additional or up to 18 months for transitional housing. So that's where you're going to get the transitional housing for. 2, SBA does not pay for emotional mental trauma or anything. Unfortunately, I know people maybe get reimbursed through a lawsuit. That's something that is purely on their discretion, but SBA will only be able to cover real estate repair, personal property replacement, vehicle loss. Third question, economic injury if you've lost a job. Again, or had jobs impacted as a homeowner or renter. No, we don't cover that. So that's something, for the longest they had disaster unemployment assistance. You may be able to lobby your state representative or potentially your congressman. I know that Congresswoman Chu has been extremely vocal in the community. Maybe that's something you can mention to the congresswoman and say, hey, we'd like to see about reinstating that, any kind of disaster unemployment assistance. Honestly, I would tell you, Joy, it's probably going to be pretty hard because of the new changes under President Trump. But hey, shoot your shot. You never know what may happen. So all it takes is an ask, but it probably will not be approved. But nothing beats a failure but a try.
Um, Okay, when you say that about the double dipping issue, does SBA require reimbursement if we recover in a lawsuit? You know, some people might be taking Edison lawsuit settlements now. So if we do that, do we have to immediately pay back the SBA loan too, just like on the insurance?
Great question. So here's what happens. If you receive any funds for real estate recovery, remember, like for like, real estate recovery, and that's a part of the settlement, then yes. Remember, in the slide, it says other forms of recovery. We had this very similar to the BP oil spill, where in 2009, people lost, their businesses, their homes because of the spillage in the water. They had a lawsuit. BP paid the money. Yes. So if you receive funds from the lawsuit that's for real estate recovery, yes, that would go and offset your SBA loan. If you receive funds for personal property, yes, because if you had SBA personal property or contents coverage in your loan, yes. If you have mental trauma, medical conditions, no, that's not a duplication of benefits. It's only like for like, real estate for real estate, personal property for personal property, or any vehicles that may have been lost.
Okay, we have so many more questions. Corey has graciously agreed to stay on for a few minutes longer. Even as he enters his 46th year, you're just a baby. 50s are even better, just so you know.
I love it. I love it. Yes.
We'll be losing Felix in a few moments, but Cherry will stay on, Corey will stay on. We've tried to ask a whole bunch of the questions that you all have asked in the chats. If there are urgent questions that you still want answers tonight, if you wouldn't mind just repeating them again. We're doing our best to manage all of these. One question John Dyson asks, still don't understand how to prove mitigation funds over repair and upgrade. That seems quite important.
Wildfireprepared.org. Go to the website, 16-page document, or come to the mitigation information session tomorrow.
Right.
I understand mitigation is very tough, but remember, mitigation can be for all perils: wind, fire, flood, earthquake. If you have a reputable builder, they should know what materials are combustible versus non-combustible. If they don't know that, you probably don't need to hire that contractor. I'm going to be honest. So they should know the materials that can be used, that are going to safeguard your home from future harm. Verified loss. Remember, it's 20% of your verified loss. So if you have $1 million verified loss, you're going to be eligible for $200,000 for mitigation, but you have to have a mitigation plan. What that includes, go to wildfireprepared.org, 16-page document. If you want to send that to all the members, Joy, I would recommend that.
Yeah,
It's easy as a
will do that.
PDF, send it out, be
I
good
will
to
do
go. But we're going to have the Institute for Business and Home Safety at the mitigation information session tomorrow. So be there, be square.
Corey, there's been questions
Sorry,
about,
okay.
Oh, sorry, Felix. Before you go,
Well,
I'll let you have the floor.
okay. Just tagging up this, you mentioned about the ADUs not being part of the thing. Obviously, if they were there before, they should be covered. It's just when they're new.
If they're new, it's not right now, it's not approved, but
Yeah.
it's still at the discretion of our processing center, because we understand that ADUs are also being used sometimes as rental income. So depending on the purpose of the ADU, may be if it's approved or not.
And what about
So
other structures like garages? Those are typically,
garages
they
are
should be
fine. I
covered,
mean,
right? Yeah,
yeah,
that
garages
question
should be
came
covered.
up.
Yeah.
Yeah, no. I want to ask just one question that we got beforehand. It was also asked early on in the chat. It might not be the typical question. I want to make sure we cover this, because a lot of homeowners, or some might be older, and they're considering, should I take on this loan, and what happens with this loan, a 30-year loan? They might have paid off their property, but now realize they need to take a loan out again. What happens if the property is held in a trust, and if heirs, can they assume the loan if that happens?
So here's what my recommendation would be. I had this with my grandmother, and my grandmother and grandfather passed during after Hurricane Harvey. If you have a daughter, a son that can actually sign on to the loan, that would be my recommendation, because keep in mind that if you were to pass and it is a secured loan, so again, going over 50,000, that becomes a secured loan, then that passes to the estate. So that will be a debt to the estate. So if the family doesn't have the wherewithal to take that on, then there may be ramifications through the treasury, such as foreclosure. So again, my recommendation is, if you have a daughter or a son that can sign on, that has the financial capability to take on the debt with you, have them as a co-borrower. Answer to the trust question: yes, trust can apply, but every one of the members of the trust have to agree to take on the secured portion of the loan, because again, the trust is taking on a secured loan once it goes above $50,000.
Corey, I have some questions for people with standing homes, people who are smoke damage. I try to say toxic contaminant damage. Any advice on proving verified loss for standing homes? Now, this is a question about, we can hire independent industrial hygienists who can say it's going to be, X amount of money. Oftentimes, our insurance company will bring in their own hygienist, which will say it's like much, much less.
Much lower.
So, if we have, let's say, first of all, will you pay for testing, industrial hygienist testing, number one? Number two, if we say it's, the larger amount, we want our families to be safe, will that be enough to come to you to say, this is the remediation that I need done at my house? Or how do I prove to you what my loss is? What do you need for those of us with standing home to prove like
Perfect.
our remediation costs?
This is very similar to the question that Cherry asked us. So essentially, yes, you can use any information that can show what the actual remediation cost is going to be. So I would try to get a hygienist report, get any information that you can get that shows, hey, SBA said my verified loss is 50,000, but my hygienist report says it's going to be 100,000. That's what my verified loss is going to be.
Right.
So, but you have to, again, submit that information, app number, request re-verification, submit the information that you have, and let our case manager, he or she review it, and they will make that determination. Most of the time, if it's something that's verified as a verified resource, which is a hygienist report, we're going to accept that. And most likely
Right.
that will allow us to approve the re-verification of your
That's
verified
awesome.
loss.
So much better than our insurance companies.
Yes.
Corey, so some people are saying they don't know how to get the email address of their loan agent because they only have the portal. So how
Yes.
do we get their email addresses? And then if there's a problem, I know you told me that you can ask for the supervisor. How do we
Yes.
get our loan agents and our supervisors' emails?
So remember, for SBA purposes, if your case manager is Mike Smith, it's going to be mike.smith@sba.gov. It's always first dot last name at sba.gov. So if it's Taisha Michaels, it's taisha.michaels@sba.gov. Now, the Mike Smith, let's go back to Mike Smith. There may be more than one Mike Smith. So if you have a situation where you don't know your case manager's email and it's a common name such as Mike Smith, John Thomas, or something like that, email me, which is at the Corey.Williams, Corey.Williams@sba.gov. I don't have a duplicate of my name in SBA system, but I will be able to look up your case manager and give you that email address. But send me an email.
Corey, thank you so much. We just so appreciate. One question that has come up several times is about what if you don't want to build on the same property again? What if you want to go relocate to a totally different place? What if you want to buy a new home? Can this funds be used to relocate and purchase a new home?
Yes. So that's where the relocation steps in. You have up to $500,000 pocket for relocation. Now, keep in mind that relocation plus insurance proceeds is going to equal the cost of your home, your relocation property. So if I'm looking for a property that's at $1.2 million and I have 700,000 that I got from insurance, and then I got 500,000 that I got from SBA, that should be enough to cover your relocation project. That would make $1.2 million. If there is a shortage, the shortage is on you to get a second loan. So if, let's say if it's $1.5 million to build, to relocate to a new property, you're capped at 500,000 for your relocation, and you only got 800,000 for insurance. Well, you're going to have 200,000. You'll have to come out of pocket for your, for the rest of the funds, because again, you have caps: 500,000 at the real estate repair, 500,000 at relocation, 500,000 at refinance, and 100,000 at personal property repair replacement.
Corey, sorry. So going back to your example, how do you get that 500 for relocation if you are already getting money from your insurance? Because I was under the assumption that what SBA gives is only above and beyond what you are not getting from your insurance.
An outstanding question, Cherry. So if you are relocating, keep in mind you're not going to be able to have your damaged property rebuilt and your relocation. If you are choosing to make a decision to relocate, all of the funds that you were going to receive from your actual damaged property, which is you can't turn around, you can't use money from SBA to build your damaged property and relocate. So all of the money that you receive from the damaged property has to be used towards that relocation property. And that's the insurance proceeds plus the SBA loan that will be used for the relocation property.
So does that mean the survivor would apply specifically just for a relocation loan and telling his or her loan officer, I'm not rebuilding, whatever insurance money I have will be relocating. So I just need a loan to help me pay for this new home or second home.
Well, yeah, correct.
Right.
And it's going to be, remember, a relocation is technically, Cherry, going to be your new primary residence.
New primary.
So yeah, so it's not going to be considered a second home. So that's why we make sure that you use all your SBA proceeds, all the SBA loan plus your insurance proceeds to the relocation. And we will be taking collateral in both the damaged property and the relocation property. FYI. So if you're relocating, you're not going to have your cake and eat it too. So we're going to have collateral in the damaged property.
Well, yes, that makes sense. I mean, there should be some security. There should be some security for the
You would be
government.
surprised the questions I've answered. Joe, can I rebuild and relocate? No, you can't.
Corey for president, says Mark. Corey, you have a whole fan base. Next time people see you in person, you're gonna be giving out autographs. You have a lot of fans here in the EFSN. So Felix just left, and he made a very good point that, Corey, I mean, amazing of you to make yourself so available here, but also we have incredible EFSN members who are constantly answering one another's questions as we're all learning together. And so he welcomed everybody to come into the FEMA/SBA channel in our Discord and ask questions and also benefit from everyone's experience. And I've just popped into the chat a direct invite to that channel. So, you can go in there. The incredible thing about Discord is also you can search. This is, it's unlike WhatsApp where you can only search back to where you've been. In the Discord, we have separate channels, every different category, and you can search in that channel or you can search the entire Discord. So please make use of that as well.
I will definitely do my best for that. The only thing is I'm having to do that on my personal phone because
No, you don't have to. You don't have to come into the Discord. I'm just saying all of us.
All of you are. Oh, okay.
Felix is
Because
always answering everyone's questions. Cherry, I mean, we have, thousands of people answering one another's questions. And so we have this incredible hive mind going. Corey, I didn't mean to, I
Oh,
didn't
my
mean
fault.
you. You do not have to come into our Discord. You've been overly generous tonight on your birthday and in giving us your email. The meeting tomorrow, someone asked, at 10 a.m. is at the Altadena Library.
Yep.
SBA refinance info, please listen to the replay and read the transcript. We're meeting in San Leone. Okay.
And I'd be more than happy, Joy, to do other webinars if we want to, as we get closer and more questions. I can always make myself available to you all. You just let
Yeah,
me know days
Awesome.
and times, and I'll make myself available for you all.
That's actually my
absolutely.
next question. As we go through the process, different
Yeah,
questions come up, so it's like, oh, now we are ready for this now. Can Corey
yeah,
come back and help us through this next hurdle? So
yes.
great.
Definitely. I'm going to be available to you all. The only time I will be inaccessible, I'm going on vacation October 12th through November the 16th. I'll be out of the country. So I won't be available during that time, but pretty much up until October 12th, if we want to have webinars weekly or bi-weekly, I'll be available to you. And then I'm going to be at the Pacific Palisades on Saturday morning at the American Legion. Feel free if you want to stop by and visit, talk.
Yeah, we've got a bunch of
Um,
Palisade survivors here.
yes, yeah. So if you want to come by and grab a cup of coffee at the American Legion, just talk your loan, talk through. I'll be there from 10 a.m. to 3 p.m. on Saturday. That's with
Corey,
Operation Hope.
I just want to say that it's been a difficult time, I know, with so many layoffs happening at SBA and across the federal government. Our hearts go out to, all these people who've been impacted. I know that when I held a SBA seminar back in the spring, it was just so difficult to even get somebody to come on the webinar because there were all these mass layoffs going on at the time. So it is truly inspiring, Corey, amidst all of that flux and all of that uncertainty, for you to be so giving and so generous. You are sort of like a model of what we hope for in our public servants, and we are all grateful to you. I see a lot of, applause and grateful thanks in the chats. I think we should probably wrap this up. You've been more than generous with your time. Thank you we will be sending out the replay within the next 2 days. We'll also have an AI summary of it, but there were so many just gems. I mean, just left and right that an AI summary will never do justice to this. So we will have this replay on our website at efsurvivors.net, and every one of you who registered for this will also get an email with the replay. All right. Well, I think that with that, I would like to wrap this up. We do have our next webinar is just around the corner. It's this Tuesday, and it is with Consumer Watchdog. The legendary founder of Consumer Watchdog, Harvey Rosenfield, will be here with us, along with Executive Director Carmen Balber and Will Pletcher, their litigation director. So you might have been hearing a lot about Prop 103. You might be wondering, what the heck is Prop 103? What kind of rights does that give us? And what rights do we have as insurance company policyholders? We might have heard that 70% of Eaton and Palisade survivors with insurance are seeing delays and denials that are impeding our entire recovery. So if you're wondering, what are your rights as an insurance policyholder, and how can you secure your rights, and how can you get involved in our fight to enforce the laws and stop illegal delays and denials, please come next Tuesday. You will get information on that. And with that, I would like to once again thank Corey Williams, thank Cherry Lee, thanks Felix, and most importantly, thank you to every one of you, EFSM members, for joining us tonight. We look forward to seeing you around.
Thank you.
Bye, everyone.